Welcome to Cushman and Wakefield Market Outlook 2021 series. Hi Brenda.
Hi Christine.
Yeah, this year is really a year to forget and also a year to remember. Singapore's economy really, performed very badly since independence, with the full year GDP growth contracting to be around 5 to 7%. And we are seeing a very different picture this time around as compared to past recessions, because past recessions, industrial properties tend to perform much worse compared to office and retail. So what is your observation really in the industrial market, particularly after the phase 2 post-circuit breaker?
Okay, industrial is very unique this time round. When phase 2 started, everybody started with a cautionary note. Industries that have benefited from this COVID situation starts to think that this is actually a good time to do their expansion plans. And users who are looking into purchasing buildings started to look out for distressed sales. So some of these industries that we know are currently looking for space are like the grocery, supermarket, biomedical sectors, e-commerce sectors, and so on. So not all are purchased, some are looking for space to rent. Activities has definitely gone up.
That's very interesting, because if we look at the grocery market, we saw that the retail online sales actually shot up to 11% post-circuit breaker as compared to only 5 to 5.8% in 2018 and 2019. Perhaps you can also tell us on the ground, why are we not seeing so many logistic deals being inked despite of this positive momentum around the online sales?
Logistic turns out to be a star performer for this crisis. There are a lot of investors who are very keen to invest into a logistic. So long-term investor who owns logistic buildings will not want to sell this asset class, I would say, at this time. Unless it is an investor who has a fixed fund life, they have no choice, but they will need to divest it. So we are seeing some of these transactions done this year, but of course not as many as what we see in the past few years. Another reason why logistics is not so, there are not a lot of transactions. Also because government has its regulations, there are moratoriums set in place such that some of these investors, they can't sell.
Yeah, and another star performer will be data center and also cloud kitchen. We're seeing some interesting demand into these two sectors. For example, data center, if we look at our Cushman and Wakefield's research report, the growth trajectory for the next 5 years is at 5.1% on the annual basis. So could you perhaps tell us how about your take on the data center and where are the opportunities?
Data center, as you rightly pointed out, is a highly sought after asset. Okay, there are many investors that has already gone into it. Some investors are still actually looking into investing into this sector. But we are somehow like in a crossroad because Singapore has signed a Paris Treaty. We are very conscious about the carbon footprint that is generated by data center. So as a result, government is actually looking into formulating policies and set the moratorium on this, or so-called bar on this sector until end of next year. In Singapore, there are quite a number of hyperscale data centers has already been set up. In the likes of Amazon, Facebook, Google, Microsoft, they are all in here already. And we are actually seeing more to come. As for the investor co-location company, government is pretty selective. They do support the hyperscale data centers, but when it comes to co-location, they have to see who are the customers that the co-location company are working with before they actually grant further data centers in Singapore.
Okay. What about cloud kitchen? Because it's quite a new sector, but because of the lockdown, we have a lot of food deliveries, and I think a lot of retailers and F&B players are also looking at the sector. Do you see any opportunities from the investor side?
We know several cloud operators or cloud kitchen operators seeking space. we actually envisage the working from home at least will actually will last quite a while, because company may adopt a partial work from home structure. So with that, some of the restaurants operators that we speak to, although they are seeing more consumers dining out, particularly during weekends, but weekdays they do still see quite a high demand in terms of online delivery service. So by having a cloud kitchen, it centralizes all their operations into one location, and they will cater for demand within that locality.
So Brenda, with the limited investment opportunities, what's your advice for investors going into 2021 if they are on the lookout for some of the investment assets?
We do see that there will still be sales and leaseback opportunities as companies strategize their business plan to become more asset-light, and as well as to redeploy their funds into the business. So this is one area that investors may potentially look out for. Another opportunity that investors can consider will be to seek companies who are looking into build to suit a facility for them. Okay, this will particularly benefit investors who actually own land, who has land bank that has older facilities on it. The investors can actually consider redeveloping the site for them. Other potential opportunity that investors can also consider will be to seek out owners who own older facilities, whereby they would like to look for partners to joint venture and redevelop the site into a modern facility or modern and as well a bigger facility, so that they can continue to use the space.
What's your take on the yield performance next year?
With limited quality industrial asset for sale, I would foresee yields to contract by about 25 basis points.
So Brenda, let's talk about rents. How do you see this logistic market performing into 2021 in terms of the rents? Where are the occupiers' demand coming from?
Okay, during this current pandemic, warehouse performed exceptionally well this time round. As everyone knows, it resulted from the stockpile requirement from the government, and also to stockpile mostly the PPE and as well as the food in order to cater to demand internally. During past few years when supply were actually quite lagging, the current stage is that it has all been absorbed. So we already seeing some landlords asking higher rental and transacting at higher than what we had done before. So moving forward, although we see in the near horizon when the vaccine is going to be found soon enough, but eventually we do foresee that the demand will continue to come from the e-commerce sector and as well as the cold storage. Logistics sector will continue to flourish, and rent is likely to go up further next year.
That's nice. What about the city fringe business park space? Because you have the work from home trend, and people are also talking about decentralized locations for office and business park space. Do you see occupiers sort of supporting this market segment as well?
Yes, city fringe business park has always been one of the space where office users who can qualify for industrial and qualify for business park use as an alternative to move to a lower cost facility without compromising on quality. So with this work from home situation, we are seeing some office tenants actually shrinking space. Either that, or they may start to look for cheaper alternative or lower cost alternative. So city fringe business park or even high-tech buildings tends to outperform the outlying ones, also because it does not compromise too much on the location. So we do see the city fringe business park and high-tech buildings will continue to increase in terms of rental.
So the economic recession really impacted those older facilities a lot more, especially those in the outlying areas. So what's your take on the rents going forward?
I mean, older facilities usually will be the one facing a lot of challenges finding tenants because the specifications are not able to cater to the future needs of the industrialists. So I would say that they should start looking into either redeveloping it or do a major asset enhancement to improve the quality of the space. If they don't do anything, they will still continue to face challenges in terms of rental, and it may continue to drop. So when it comes to tenant looking for space, they will usually be very selective with the type of facility that they look for. So the modern ones will be the one that will stand out better than the older facilities. They really need to start looking at it differently.
So Brenda, what do you expect industrial rents to trend next year?
Okay, for City Fringe Business Park and logistic or warehouse space, which is the star performer for this crisis, we are seeing rental to improve between 1 to 3%, while the outlying high-tech building, business park, and the older and conventional factories, we do see it contracting between 1 to 5%.
Thank you, Brenda, for your sharing today.
Thank you, Christine.
Yeah, we learned a lot about the industrial market, and it seems that it's well positioned to capture the recovery post-pandemic. But of course, our economic situation is still facing a lot of headwinds. But we see sectors such as data center, e-commerce, logistics, as well as cloud kitchen to be the star performer going into 2021. So thank you so much, Brenda.